May, and it's probably a little bit ambitious to do this so fast after the earnings call, but here we are. We're going to talk about AMC. The stock is trading down in the aftermarket pretty aggressively. Realize that there's still shareholder votes, proxies, stuff like that that is not on this call. I have not reviewed anything that might have come out as relates to that yet. So I'm just going to be reviewing the earnings call. It was a pretty outstanding quarter. I'm not going to lie. It was a pretty great quarter. That said, there were a few things that for me at least were missing. Not sure if that's where people fell out on as to why that might be part of what's going on. Additionally, you've got a ton of trading dynamics that are happening in this stock, not the least of which is I think that the shorts were in fact scared going into the quarter because it is in fact an outstanding quarter. AMC is finally profitable. Let me get into it. Disclosures, past performance is not indicative of future returns. Full disclosure on what I have the bonds, and to me, that's the right way for me, given my risk tolerance and what I need to have happen with my money to do things. I also have some options on it right now, the way that my strategies are set up. Hopefully it'll be okay because I did a very defined risk bias upside strategy on AMC with some downside protection just in case things got crazy. So we shall see, because honestly, the band with which I think AMC will trade tomorrow is pretty outstanding, given how, you really don't know what the full reaction of folks is going to be until you see it. Let's go ahead and share screen here real quick. And then, guys, really, you want to do your own due diligence. Actually, let me just say this really quick because I do think it's really important. Guys, do your own due diligence, number one. And number two, make sure that you understand AMC is still a turnaround story. So right now we are in the portion of any turnaround where you have the most contentious forums for investors, because the folks that have bought in for the turnaround so they could get the slug that they needed, those folks are still in it. Then there's a set of folks that are only coming into it for the first time, and they've got to create estimates that I actually don't think management did a good job helping them with. It doesn't mean that they can't make those estimates. It doesn't mean it's necessarily a bad company or anything like that. It just means that I think he left a lot of extra work for an analyst to come in and do any estimates. I'm going to show you why I feel that way. Okay, now let me share and that leaving that work there for analysts versus just spelling it out, that always makes it a little bit tougher for larger size investors to come in and really support the stock and bring it higher, bring it back to where it needs to be. Okay, let's start with the income statement. Start from the very beginning. I always think you start with the income statement because otherwise it gets very confusing. And hopefully you guys can see this on my screen, but you had revenue up 45%, which was crazy, amazing good given the quarter. And he said this over and over and over again on the call at the very beginning. There was 16% lower attendance than 2019, but they were 30% more profitable per attendee. And therefore, they ended up profitable, period, despite the fact that this quarter was still not all the way back to what 2019 was doing. Okay. So that is something that I've discussed before. For those of you that follow me on Twitter, I've talked about it there. Anyone that's talked to me, I've explained it before, which is in a turnaround, you reduce the operating structure. And if you can just get the market to come back to where it used to be on volume, either you get that revenue or you get that attendance because, there was an event like COVID that took people out, or, and more importantly, you get it because your competitors are gone, or as we see here, the closures that they did of theaters actually resulted in closing down unprofitable theaters and opening up more profitable theaters, such that you really do get more body perceived. Any number of these things happening, plus just some luck, quite frankly, because you've got still the writer's strike, you've got all this stuff going on. All of that is so important for the speed at which the earnings leverage happens. So what do I mean by that? I really want to be clear on that. And I'll go through it over and over for as long as I'm covering the stocks. If you look at this, because this operating structure is better, this the operating income is positive, right? So you do have, so this is, there is, the theater fixed cost. There's a lot of variable costs. Popcorn, is per serving, whatever you want to call it, etc. But ultimately, we're still not at where this wasn't like greater than 2019 in attendance. If you got, as you continue to get closer to that, this number isn't just going to be linear. It's going to be far more than linear because the profitability per attendee is so much greater and your fixed costs stay where they're at. Right now, fixed cost still forms the bulk of what's going on here. Now, I also want to mention that they somehow managed, despite all of this stuff in the middle on corporate borrowings, which is approximately the same as last quarter. So there was no change to interest costs, et cetera. When I compare it to the previous quarter, they still ended up net income positive, which is such a big deal. Okay, a lot of folks have a lot of different opinions about the fourth quarter. The third quarter was pretty amazing. The profitability he did mention of Taylor Swift and Beyonce is pretty outstanding. But the thing he didn't give any kind of real numbers to help folks with guidance. First of all, he didn't give guidance because that's not his deal. But even more than that, he didn't really explain the profitability of the Taylor Swift and Beyonce contracts, other than to say Taylor Swift is going to be far more profitable than Beyonce. And that kind of leaves this sort of ability for people to just play the guessing game, play the whatever games they're going to play about what's the deal with AMC. So that's a first place. You would think probably, or you would think that, oh, but they're profitable now. Isn't that game silly? I would say yes, and then let me explain it as if I'm giving you a straight answer on the bear case. It really is this right here. This is still outstanding, and it was not answered on the call. And I'm not sure why there wasn't slightly more guidance given. It may be because it depends on the vote, because the way that the vote is set up this quarter, all of the board members could come up for vote, depending on how the proxies came out. I don't know yet. If you do know, feel free to put it in the chat. But if you look at this, so cash is up 15% year over year, and then it's up by 294 million since the last quarter. Remember that he did like a $325 million capital raise. So he didn't do much with the cash except leave it there. And it's the right call in so many ways because you've got these unknowns. You don't know how long the writer's strike is going to take, and you don't know, how the, how rates is going to feed into theater attendance is going to feed into what have you. I would say this, other than with COVID, most downturns in economic environments don't have this massive impact on theaters because people still want something joyful in their life. Theaters, casinos usually do okay. And then alcohol, all those beverage, all the sin stuff plus theaters tend to do okay, even in a bad economy. So there is that. However, he didn't really touch the money that he raised capital on. At the very end of the call, he kind of gave some lip service to it. I'll say it that way, but I don't mean it in the negative way. Like he gave kind of a voiceover, we'll say, on it, but it's not enough really. If you were trying to figure out how's this company going to deal with the debt, it's not enough to answer that question. He said, we've been strategically really aggressive about maintaining high levels of cash. We're going to continue to do that. That said, we kind of need to see a little bit more progress on the debt. Yeah. Okay. So you can see from these numbers, corporate borrowings were down quarter over quarter, year over year, what have you. This needs to be pulled down a little bit. I'm just one girl, guys. I got to try to make this. So you saw like maybe a $45-ish million pay down. That's it. It's really tiny. Okay. Like mixed feelings on that, but almost everything else is so positive, you can't be that nasty about it, okay? Let me just say it that way. The other thing I just wanted to highlight is relative to last quarter, the June quarter, okay? You do see this massive increase in deferred revenues and incomes. What is deferred revenues and income? Deferred revenue and income is a couple of things. And there is actually a really big footnote in the 10K, or excuse me, in the 10K, the Q, the quarterly report, which came out at the same time. I tried to review both at the same time and then put this together as fast as possible. It's not going to be in the 8K release, the press release that just explains what's up. It's going to be in the Q, but they tell you exactly what that is. It includes everything from gift cards, and it also is your pre-booked, your pre-sales for seats in the future, which usually it wouldn't be that big of a deal, but because we have the Taylor Swift stuff going on, that's kind of hidden in there too. But you can see that even it's hidden in there, even it's sitting in there, it's just a little bit over what was year end. So you got to think here. Okay, let me just make this really clear. There's seasonality in numbers, and it kind of sucks that sometimes people don't. Sometimes they'll give you the previous quarter and what have you. So 385 to 411, that's a legit bump. People went ahead and pre-bought tickets, probably for Taylor Swift, is my guess. Okay, wasn't a big discussion. I really think the Q&A on AMC could get a lot better. I'm not sure why these questions were so softball. You want to have good investors, you want to have good investor questions, but it doesn't need to be this much of a softball. Okay, so that's the major thing. The December quarter is necessarily going to have higher prepaid expenses because you think about Christmas presents. Hopefully those of you that are watching that are shareholders are considering an AMC gift card for a teacher, stuff like that. So those gift card purchases all go into prepaid expenses. I'm hoping to see that number go up next quarter. It's a little bit awkward because there was no real discussion on that, which would have helped with financial modeling for new people that we're going to look. You're going to need new people to come in and buy this stock and support this stock. So you do need to try to give guidance at some point, even with all of the uncertainty that's happening. That's my major criticism. Let's continue on what I saw, okay? The other things I saw that are important, this right here, this is free cash flow and cash burn. Let me just make this little slice as big as I can. All right, so operating cash generated was $108.7 million. That's amazing because thus far the company's been in cash burn. If you go back to other quarters, they were right on top of not having a cash burn. Okay, so this is a big deal. And basically they're removing the interest paid. So this kind of gives you a sense for how they can use the cash to start to pay down some of the debt. Remember, interest is both the interest payments and then anything that they actually incur sometimes. I think this number also incurs any kind of pay down and stuff like that. But free cash flow was 8.4. I do want to help for those of you that are still learning these statements, because it took me half a beat for whatever reason. I don't know. I was losing a little bit today. But if you're trying to figure out where's the 65.9, I just want to remind you guys, because I do some accounting tutor stuff, if you will, on my channel and otherwise. So please subscribe if that's interesting to you. But all you do is you take last month's free cash flow, because free cash flow, operating net cash used in operating activities is what this number is. You'll see net cash used from operating. So if you go into the 10K, so this is from the 8K, and this is from this is from the 8K, and this is from the quarterly, the 10Q. Okay, so this minus this gives you the 65.9 million cash flow in operations. Just in case you're like, I don't understand why these numbers don't sync, or how would I get these numbers to sync? That's what that number is. Okay. Thus far, it's been cash flow negative, but it's gotten better. Why do we care? Okay. Why do we care? We care because in a turnaround where you had negative, where you have a lot of debt and you had negative earnings, you actually need to generate cash so you can start to pay down the debt. EBITDA, great metric, wonderful. It's your earnings subtracting interest payments and taxation. EBITDA is important if someone wants to buy the company, because the person buying would have money to pay that debt or would be able to get that debt at a lower rate. Okay, that's why bankers will use EBITDA oftentimes. They'll use both, quite frankly, but they'll use EBITDA oftentimes to think in terms of what is this company worth? How much does it actually make? What is the earnings before all the other nonsense that is not going to be relevant once that company comes in? That's EBITDA. Okay, that's the profitability of the company. That's why every single quarter He'll give you an EBITDA estimate, which was great this quarter, by the way. It's like 195. Hopefully I put that in here. No, of course I didn't. So it's like, I'll try to find it a little bit. But EBITDA numbers were fantastic this quarter, like something like it was about 95% of what it usually is in 2019 when things are great. $11 billion box, that sort of thing. Free cash flow is if you don't get bought, what are you generating so you can start to pay stuff back? Okay. So just if you're listening to those numbers and trying to understand what's up, that's the deal. Okay, cool. And if some of you guys have another reason you use these two metrics, stick it down in the comments below. I don't have to be the end all be all. If you have some other ways that you're thinking about it, super cool. Okay. So this quarter, free cash flow positive. I'd love to see it more positive, obviously. And then operating cash, you still you're finally out of the cash burn situation, but you have to pay back the debt, and because you have to pay back the debt, there's still a tremendous amount of question mark around this because you just have so much debt. Now, look at this CapEx number. It is up year over year, but this is historically low. Historically, they would spend on the year approximately 500 million. If we go to the cash flow statement thus far, you can go to, it's going to be cash flow from investment. You can see that they've spent 153 million for the trailing 9 months. Okay. So they're spending about 250 million, 150 million, 350 million less. Sorry. So embarrassing for an Asian girl to get the math wrong. So like 350 million less in capital expenditures. Or then you've got the final quarter. But this wasn't like they really have taken in capital expenditures. I was hoping for some greater guidance on what CapEx might be going forward. He did the voiceover over and over and over again. And here's where I think it gets a little bit hard if you're new to the name, trying to come in and make an argument, because you're a big investment house or something like that, is that this CapEx number has been low for so long and we all know it's coming, okay? And actually, it probably should be spent. The specific portions of the call where he's talking about this is whenever he's talking about the fact that the laser screens decrease long-term costs because you don't have the light bulbs, et cetera, plus they're just easier to run. And also they bring in more seats. It's, you get it's more profitable, et cetera, et cetera, et cetera. So we know he's going to do that. He did in fact provide those numbers here. Okay. I tried to tape in my little boxes to the right. This is what was the previous quarter. You can kind of see it taped in. It's very makeshift because, got to do this quickly. It's just me. So he showed it's the premium large formatting. There's no change to that. There were a couple that were installed in Europe. So this is international over here. So you had 4 less last quarter. Most of what was added to in the US was dine-in theaters. Okay. And then down here, you really have mostly something happening with regards to reclining seats. So you've got more reclining seats in international markets, and same thing here in the US, as well as whatever's going on in dine-in. Okay. Overall though, so because he spent so much time talking about this premium large format and we only have 4 editions internationally, my suspicion is the CapEx number probably does need to go up. It's so low as relative to what it used to be. Okay, great. The other thing I just want to mention, let's see, he voiced it over. Oh, yes, he voiced it over. They opened 1 location, they closed 3. So for everyone that's pretending like he's on some kind of spending freaky thing to try to build more theaters, that's just not true. So that is something to take a look at. And then the other thing I wanted to mention, oh yes, okay. So he talked about, there's 2 other things I want to mention. Merchandise revenue, he did give us that number was 50 million. That is growing. We don't have a sense for the profitability of that. I would love to see that profitability for that. There was a piece where he does the breakout fully in the 10K. I forgot to post it in here. Not a big deal. But 50 million is what's happening merchandise revenue. With respect to popcorn, he's going to be expanding into Walmart, Kroger's, Publix, and Amazon. That is phenomenal because these are very large distributors that should cover the entirety of the US. And then these are candies that he's going to be expanding into. So far, we have nothing on the profitability of this or the size of revenues. That I would like to see, and I would love to see it broken out where it, or just let us know where it is within the income statement, what have you. It's not there. There's no snow caps. I love snow caps. It kind of looks like this emoji, so I put that emoji there for you guys. And then the last little thing I really want to talk about is the debt. Here is the debt, and I mean, I kind of understand why he didn't pay the debt. Oh, sorry. The I kind of understand he's still paying down this second lien pick toggle, okay, and he should, because this thing has a high interest rate and a very low credit rating, and getting rid of this is the best way if you're going to try to make progress on the debt. That said, you still have about $3 billion that are due in 2026. There is in the disclosures a bunch of information on precisely how profitable the seats are, and in particular, I wanted to mention here, I had really been not stoked about what was going on in the international markets. The international markets really is Europe, okay? Latin America is Cinemark. Europe is AMC as far as like who has theaters where. That finally became a bit more profitable. 12.6% is makes sense to me. Otherwise, I would have been upset again this quarter on that. And so I'll stop sharing for now and see if there's any questions. Oh, thank you guys. I got Snagger Mark. I just want to do a shout out. Soot, shout out to you. Brian, thanks. Jake, I'm so sorry. Yeah, it was a good call though, Jake. I know you're probably really upset because your cost basis might be pretty high. Um, you know, you need new entrants need to come in. There's really no other way to talk about it other than that. But Donkey Kong, it was definitely a good call. I mean, no matter what, this was a good quarter. It's just if he had given, I think, sharper guidance, that would have been great. At the same time, even though I say that, I recognize fully that it's not easy to give guidance when you're still in the middle of a writer's strike, quite frankly, because certain things get pushed out. So it's a little bit harder. I would remind you guys that in the fourth quarter of last year, after everything kind of the chips fell and he had a chance to review all the movies that were coming out, that's really when he gave guidance and talked more aggressively about what was to come in 2020, the following year, so it may be the case that he just wants to make a habit of only giving guidance in, the fourth quarter. In fairness, quite a lot of companies do that. So we shall see. I'm not seeing any other questions, so I appreciate everybody that tuned in. Thanks so much. Until next time, bye guys.